Professional traders abuse these two powerful institutional levels that show up every single day on every chart. So futures, forex, crypto, stocks, it's all on there. And it's so simple and easy to use. A literal 5-year-old is able to draw them out. And it works in pretty much all market conditions, whether market is trending or chopping. And by the end of this video, you'll know exactly how to take advantage of it to make over $10,000 at least every single month trading these levels. And at the end of the video, I'll also give you the indicator for it for free as well. So if you guys don't know who I am, my name is Eric. I'm 20 years old and I've been trading for close to 5 years now. And I actually use these levels every single day within my trading strategy. And it makes me consistent money every single day. In the last few weeks, I've personally gotten over $12,000 in payouts. I got $4,000 up here from Apex recently and $7,000 from Top Step recently. And I've been doing this consistently for years. To start off, let's look at the NQ daily chart. And I need you guys to understand the market at a bird's eye view. So let's look at this daily chart and the trend. We can see, obviously it's in a minor uptrend with these occasional pullbacks. So what's the pie probability direction to trade with when we're day trading? Well, if we're trading within these daily candlesticks and we're trying to follow the trend of the higher time frame, longs along this higher time frame trend are probably going to play out. So we want to tend to look for longs while we're day trading. And now the two powerful levels that I'm actually going to be talking about in this video is the previous daily high and the previous daily low. So let's look at our daily chart and actually see how it plays into it. Let's start off on this day. You can find the previous daily high and the previous daily low through the wick, the top wick and the bottom wick of the daily candle. So if we're trading on this day, this daily candle, and we look at the previous daily high, we can see, we can draw it out from that wick. And so on this day, we can see market immediately pushes into the previous daily high. And after we take out the previous daily high, what do? We continue trending up. So we can first long into the previous daily high. And then after we break outside of this previous daily high with confirmation, market wants to continue trending upwards in that overall uptrend, and we can look for longs above that previous daily high. And now let's look at the next day. We can see if we're trading on this day, if we look at previous daily high and low, what's relevant here is the previous daily high. We've just clearly gapped above it. And because we're sitting above that previous daily high, what is the probable direction we want to go? Because we've gapped above it, market is showing strong momentum to the upside, we can just look for longs. And look, longs have given us plenty of opportunity throughout this day, and we can see it's ran even all the way up here. Now finally, up here, even though on the higher time frame we are in an uptrend, remember, even in an uptrend, the market just doesn't pump straight up forever. It has to have some sort of pullbacks or reversals within it. So we can see on this day, we have this previous daily high and our previous daily low. But if we're only looking at our previous daily high, we can see market opens around here and eventually at some point does actually move down a little bit. But again, what plays out? Longing up into the daily high. And then after we hit the daily high, right, we can see if we just wait for a little bit more confirmation, we can actually see if we try to long off of that, it's probably not going to play out. And if you did try to long, you could still catch a move all the way to the top of this wick. And now that we've swept this previous daily high, we can see we start to get rejection and that overall time frame turns a little bit bearish. So now let's go ahead and look at the next trading day, this day. So again, let's draw our previous daily high and our previous daily low. And notice how now we start to get some weakness. Market opens here, right? The open daily candlestick. And then we move down. And with a little bit of confirmation and a close under that previous daily low, look, we get a massive dump, setting up for great shorts throughout the day. Just absolutely beautiful. We can catch even just like a small part of that move, and that's already thousands of dollars, even tens of thousands of dollars. Nothing too crazy happening on this day, but if we look ahead to the next trading day, look at this red candle. It's just absolutely beautiful for day trading. Now again, look at the previous daily high and low, and you can also keep in mind of other days highs and lows. But in this case, let's just focus on the previous day high and low. You can see market opens, it tries to move up a little bit, but then ultimately what happens, we try to reach for that previous daily low, and if we get a strong confirmation, we can look for shorts, and look, boom, there's so much opportunity for shorts here. And it even breaks this day's low as well. But main point is we're able to catch a very strong bearish move just from figuring out how it interacts with that previous daily high and that previous daily low. Now, when we're actually day trading, we do want to draw these levels out. So I'm going to show you how to do that as well on the trading view chart. So for futures, it starts at 18 o'clock. Might differ for what you're trading, but if we go ahead and look at 18 o'clock, so today would be Wednesday. So we want to look at Tuesday, 18 o'clock, which would be actually Monday, because that's the start of Tuesday's trading day. So if we go ahead and mark this, right, that's the start of our previous day. And if we look at the high and low, we can draw this as our low, because we can see that's the lowest point of the day. And the highest point of the day, we would want to look at around 17, right before 17 o'clock. So pretty much from here, this line all the way to 17 o'clock here. And we can see the highest point of the day was this wick. So we'll go ahead and draw our previous daily high and low from there. Mark it out, so we know which line is which. And now coming into the trading day, if we go ahead to the 5-minute, we can see we're already trying to reach for that previous daily low. So let's just, move the chart ahead and see what actually happens within market open. So coming to 9:30, we can see pump up and reach for previous daily high. We do have a break of that previous day high, and with confirmation, right, we have a strong candle here, and we do actually start to move up, get displacement, and close above. And now we can look for longs and just catch a small move. We catch like 5 points, that's easily $200, $250, and with multiple accounts, that's already like $2,000, $5,000. And you can just see how this entire day plays out after we take out the previous daily high. So we can see we run up, forming our daily candle, which is entirely green. So any longs along this trend, just absolutely beautiful, amazing, and trade shouldn't take you more than a few minutes. Now, I did want to add that marking these levels every single day will get really annoying. So I actually put an indicator out that pretty much automates all this. So we can see we have our previous daily high, our overnight low. We can see we have our previous daily high. If we zoom out a little bit, our previous daily low, which matches with those lines we drew. But it just makes the process a lot easier, so I don't have to draw it every single day and worry about it being the right level and messing with all the different times and looking at the highs and lows. Instead, I can just focus on trading the levels. So you can see here, I have my lines drawn out and they'll just move automatically for me. Now, how do you actually use previous daily high and previous daily low when you're actually day trading? So what I like to do is use them as the draw on liquidity, which is essentially where you think price is going to go. So these two levels are kind of going to act as magnets for your trade and help you read the market. So for the draw on liquidity, if we're moving up, if we think it's going to move up to previous daily high, then we're only looking for longs. And we think it's only going to go down to previous daily low, then we should only be looking for shorts to previous daily low. And if we break above the previous daily high with confirmation, then we look for longs. And if we break underneath the previous daily low, then we only look for shorts. And we can see pretty good example here of longing to the previous daily high. Off our 9:30 open, we can immediately see we start to print upwards and get a very strong bullish move. And as we're moving up, we can zoom out and see our previous daily high and our previous daily low. So in this case, we have our previous daily high drawn out by this black line. And if you're trading, look guys, it's just moving straight up. All you have to do is long up to previous daily high. And you don't even have to catch the entire move. You can just catch a small piece and already make $1,000, be done in a few minutes. It's absolutely amazing. Now, before I show you more examples of using these levels in all these 4 situations, let me show you a trick to avoid chop. In order to avoid choppy days, there's really 3 steps. First, right, start at the daily time frame. And then second, you're going to want to ask yourself, have we already swept the previous daily high and previous daily low before the 9:30 open? So if the market overnight has taken those levels out, we can hopefully assume that some major move is going to happen after market open. And then the second question we're going to want to ask is, are we going to reach for a previous daily high, previous daily low? Is there enough volatility in the market within that day to actually reasonably go for a level? If your answers to those 2 questions are no, then we're going to have choppy conditions. So let's look at an example. This is December 8th and December 9th, 2025 on the daily chart. And so we can see on this day, right, we have our previous daily high up here, previous daily low. On this trading day that we're looking at, December 9th, it does not take out the previous daily high and previous daily low. So let's actually look within the day to see what it looks like. So we have our previous daily high marked out and our previous daily low marked out. And we can see market is just moving sideways, which is terrible trading conditions. It's very, look at these wicks. It's very wicky, not great conditions. And then after we move up, we take some sort of highs and then we reject down and do try to reach for these lows. But again, look at these wicks. It's just not amazing conditions. So if we know the market is chopping, then there's 2 things you can do. You can either avoid trading, which is what I recommend you do if you're a beginner, or the second thing you can do is long the bottom and short the top, which is what I like to do. So if we look at this chart here, let's say we already have our obvious target in this day, which is a data low, and we're looking for shorts. We can see we're kind of forming a range here, which is, kind of our choppiness. And if we're long in the bottom, short the top, if we look at this range and we long the bottom, right, and, take profit maybe at the halfway point or maybe at the top, then we can catch a very easy scalp there. And if we're shorting the top, then look, any one of these highs that we try to short off of, that's gonna move down to the bottom of the box and we take profit. Or if we want to get a good entry and hold for the entire move, then we're basically getting a free pullback. Now, if you are long the bottom, short the top, it is more high probability to trade in the direction where it's going to go. So for in this example, if we have this data low, right, we know it's shorts. So we can just filter for shorting the top. So if we just short these top, we can get some crazy entries. And, after the market does break out of that range, start trending downwards on those pullbacks, you can just short pretty much all the way down, and it's just so easy. Now, let me show you the 4 examples of previous daily high and previous daily low being used as a draw on liquidity. The first one is we trend up to go to the previous daily high. In this case, we only want to look for longs, guys. When we're moving to a very obvious target, please don't trade the opposite direction. Unless your strategy is kind of a counter trend trade, just do the obvious thing and just go with the trend. The trend is your friend. So in a case like this, right, if we have our previous daily high marked out, and market is just obviously trending upwards and it wants to go for that level, just long, guys. Just follow the trend. It's very easy. And you can enter off pretty much anything, whether it's a fair value gap, a new 1 minute candle, or 9 moving average. You can look at my strategy on how I enter and how I use the levels, but look, it's just so simple. And if you're a counter trend trader, you're just going to get absolutely destroyed on this day. Main point is that, we have obvious level. We want to reach for it. Just follow trend. It's that simple. Stop. Don't short. Like, why are we shorting when the market's just going up to and it wants to reach for a very obvious level? There's no reason to do that at all. And that's a big mistake that a lot of beginners make. They try to force their own idea when the market is just, completely telling them something else. Second example is if we go down to the previous daily low, then we only want to look for shorts. Okay, so we can see here, in coming into market open, we get this move higher, and then we get strong displacement downwards, right? We take out these highs as well, these overnight highs. But main point is we're short biased. We think it's going to go previous daily low, and look at this entire move we can catch. These are 5 minute candles. It's just straight red, and we just need a very tiny piece of that, and we can make our money and call it a day. Even just like this move here, that'll give you a few $1,000s. It's all you need. But the direction, what level it's probably going to reach for. Just follow the trend. Now let's look at another example, which is a break above the previous daily high, which means you only look for longs. Now this is a little bit trickier because you only want to use confirmation on these breaks. You don't want to instantly jump in, and this will require a little bit of market experience. But let's say you already have the experience and you know on this day we can see we have our previous daily high marked out by this green line, and market breaks above. And with confirmation, let's say we already know it's longs, then look, we can just catch that pump up, and that's a great move. And let's look at another example here. We have our previous daily high coming into 9:30. We're already starting to run up. After we hit the previous daily high, we start to chop a little bit. But again, with a little bit of confirmation, you get a strong candle and you enter in long. Look at this beautiful move we can capture. This is thousands of dollars. Very, very simple. And now for the break under the previous daily low, then we only want to look for shorts. So let's look here. We have this red line, which is our previous daily low. So we can see down here, and this is the overnight session, but we can see market first dumps to that previous daily low. And then after we take out the previous daily low with a little bit of confirmation, then you can look for shorts. And look at this massive move that you can catch. Thousands of dollars within 10, 15 minutes, and you're done for the day. It's that simple, guys. And that's why the previous daily high and previous daily low is so powerful. Now, these two levels are an extremely powerful tool when you're developing trade ideas or context for the trading day. So, it's not a strategy, but feel free to use it in conjunction with your own strategy. ICT strategies, order flow, whatever style you trade. They're just really good levels to have on your chart. But I personally love to use it with my orb strategy, which I can link another video to that in the description of this. But by making 4 to 10 points on ES a day, right, it's $200 to $500, you can easily scale up and build your income by trading. And if you just make $500 a day on 20 funded accounts, look, that can make you $10,000 a day. And that's the power of funded accounts. You can see if you have one account and just, for example, copy it among multiple, then you can make thousands of dollars very easily in a single day. Now, as I promised, you guys can get my previous daily high and previous daily low indicator for completely free. And it's great because it saves a few minutes every single day by automatically drawing these levels out. And, it adds up over time and makes trading a lot easier because you don't have to be stressing about, oh, do I have the right levels? Nah, it's just going to be there as soon as you open your charts. So I'll leave a link to that in the description of this video where you can get it completely for free. I do only give the previous daily high and previous daily low in this free version, in this trading view indicator. All my mentorships do get access to the full indicator and all the levels, but the free version is more than sufficient enough. Now in the description of this video, I'll also leave a folder with this board. Now, also in the description of this video, I'll leave a folder of this mirror board, as well as my full strategy PDF and video if you guys want to go ahead and look at that, as well as a link to my indicator, all for completely free. And you guys are also welcome to join my free Discord community in the description of this video too. If you guys have any questions, you can go over to the questions channel. And I also wanted to announce that I'm launching my 2.0 mentorship, which is coming very soon. And, the reason why I started is because learning trading was very confusing for me in the beginning. Gurus, confusing information. And, if you're scrolling on YouTube, everyone's telling you all sorts of different things. So I decided I'm going to completely change that and give you direct one-on-one access to me. So Zoom calls, as well as giving you proper trading education. And, just avoid the struggle, time, and money wasted, and just instantly get results. And if you don't become a profitable trader and get your first payout within my mentorship, I'm personally going to send you $1,000 back for wasting your time. So if this, guys, sounds interesting to you, go ahead and head over to fengfutures.com/waitlist and apply there. But in the meantime, thank you guys for watching, and I'll see you guys in the next video.